This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 21st, 2017. Our time is 8:40 Mountain. A radio show has a podcast. We're portable. We go anywhere you do. It's through iTunes. Type in the World Financial Report on Radio. That's where we are. You can also find the podcast on Harold's websites, rarecoloreddiamonds.com and HESradio.com. The shows are archived and streaming live for you 24/7. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, Featured Diamond of the Week. You can see it at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. It's a .46 carat pear cut, fancy, intense, purplish pink argyle. We'll talk about diamonds, argyle diamonds, coming up in the second half of the show. What a week it was. As we tape today's program, yesterday the Fed in the United States chose not to raise interest rates. They said December, going up again. In 2018, 3 more hikes. As a result, we saw the loonie go down by a penny, the U.S. dollar up by a penny. Also, we had Hurricane Maria, and the news that we have as we tape right now, obviously a very serious situation. The entire island of Puerto Rico was left without power after the U.S. territory was battered by Hurricane Maria. Chuck Watson, a disaster modeler in Enkai Research, Savannah, Georgia, said the damage may be about $30 billion. Maria, now a Hurricane 3, expected to move away from Puerto Rico over the next several hours. The island, which sought protection from creditors in May after a decade of economic decline, is not well positioned financially to rebuild without help from the outside. Then there was a second earthquake in Mexico. More people have died as a result of that. U.S. President Donald Trump spoke before the UN, and he went after Iran and North Korea. Some people loved the speech, like Benjamin Netanyahu, who leads Israel, and others, well, they didn't like it so much, some countries. Toys R Us filed for bankruptcy, trying to survive until Christmas. Norway, the sovereign wealth fund they have, and they've been using their oil and gas wealth for years and years put into this fund. They've made very wise investments over the years. It hit $1 trillion. An amazing number. Congratulations to the people of Norway for the foresight to take that money, put it away, and have it invested on their citizens' behalf. A brilliant, brilliant move. And Harold, it really was a tough week, obviously, with the hurricanes. You look at what happened in Houston. We know what happened in Florida and some of the states that are above Florida. You have the Carolinas and Georgia. And then you get into the island countries, the nations. Some of them have just been completely wiped out. And it's going to cost billions and billions of dollars to repair. And who knows if it ever really gets done.
Well, I can tell you, Randy, it's very, very concerning. First of all, our hearts go out to everybody that's affected not only by the hurricanes, but the terrible earthquakes in Mexico. It was heartbreaking to watch that on TV the other day. Fact is that Florida still is not back up. Our office in Sunrise opened last Thursday. However, according to my secretary, she says that driving, it's like a war zone. Most of the lights are still out, debris piled up on the side of the road. None of the trees have any leaves on them. Most of the trees were destroyed. At the country club that I play golf at, they lost 150 trees. So the fact is that in our office in Palm Beach, that is just getting up. This week, we were just allowed to get back into the office. They just started to restore the power. The internet still hasn't come back on yet, but the sad part is that Palm Beach, where Donald Trump lives, Mar-a-Lago got heavily damaged, because it's right on the ocean, as is our office. We have one of the only office buildings in Palm Beach that has a view of the ocean. Well, it's almost like they got sandblasted. The wind was so strong, these magnificent buildings look all brown now because of the sandblasting type of thing. So it's going to take a long time for this, to recover. Again, as far as our business goes in Palm Beach, we've barely been able to get into the office. They've allowed one person at a time. There was still a curfew going on this week. I think they just lifted that. But again, when you're talking about Palm Beach, you're talking about the wealthiest area in all of North America. And again, it's a very protected area. So we couldn't get into our office till earlier this week. Again, the air conditioning wasn't on. The internet isn't working. We just got the power back up. Insurance was a massive problem for us because we have an unbelievable amount of diamonds in the safes and everything in our offices. And just at the last minute when the hurricane was coming, our insurance company told us that if we didn't get our diamonds and jewelry into a bank vault, that they were going to cancel insurance. So we had to scramble and get Brinks at the last minute to come to the office and get all of our diamonds. We have over 3,000 individual pieces of jewelry alone, let alone everything else we have. So that worked out well. Just had to sit down for over 6 hours with the insurance company yesterday just to be able to get back into business type of thing. So I'll tell you, these hurricanes and everything are so disruptive for business, for life, for everything. And so many people in Florida have not gotten their lives back together. In fact, many still don't have any power. Same situation in Houston. The fact is that the hurricane in Florida was massive, but didn't cause as much damage. I haven't heard the final number, but they're estimating that in Houston, which was a very wet hurricane, it was over $100 billion. $100 billion. Then the earthquakes in Mexico, the other hurricanes that hit the islands, the amount of damage is so severe, but where is all this money going to come from? So basically, we believe that they're going to have to start printing money again because I just don't see how the U.S. government has $200 billion sitting in a coffer waiting to take care of the rebuilding situation. So it's been a very, very difficult time. This is why I moved my family to Colorado during the summer, for this exact reason, is that when a hurricane hits, you're out of business. So at least in being in Colorado, we're still able to operate our business as much as we can and still keep in touch with clients, whereas for basically 2 weeks, we've been shut out of business, as have many others, due to the fact that the hurricane hit. So we're going to have to see what the ramifications are financially of these hurricanes. But the fact is that the markets are all over the place. We did see a strong rally in gold that took us over the 1,300 level and took us very close to 1,350. Now, as we're taping the show today on Thursday, gold's down another $11, and the market's down to $1,290. So we've seen about a $50 to $60 pullback in the price of gold. Now, a lot of that has to do with the fact that North Korea nothing has happened at that particular point. So there's a bunch of premium built in to the gold market just in case something happens now with Iran, with the threats that Trump has been making, and obviously with North Korea. So again, we didn't break the 1380 level. That's the level that I told you is the most important number for gold, is it has to break 1380, and every time it gets close to it, it backs off a bit. Again, we saw a similar situation at 1300, and it took 4 or 5 attempts for gold to break above the 1300 level. The only way that I see gold breaking above 1380 is if things do heat up between Iran or North Korea, or if the dollar falls further, based on the fact that the U.S. may have to print a lot of money to help with the hurricane. So we'll certainly analyze what's happening, but in all honesty, the U.S. dollar did increase quite substantially the last couple of days, and we're going to see what happens. Again, right now the markets are trading in a mid-range, and we need to see a breakout either way. On the low side, it's 1,050. I just don't see us hitting that. And on the upside, it's 1380, and again, it's going to take a lot for the gold market to break above there. Similar situation with silver. Silver had broken up to around the $18 level. It's trading at 16.98 at this point, down about 25 cents. We need to see the silver market get, nicely above the $20 level in order for me to anticipate that this market is going to take off further. So at this particular point, the Canadian dollar is trading at 123, almost at 124. The U.S. dollar has come back to around the 92, almost 93 cent level. So again, we need to see the U.S. dollar get back up above par in order for us to be excited about it again. Now, again, a lot of this has to do with the fact that Trump has just not come through. He hasn't come through with any of his promises. He's having a lot of problems getting anything passed. He's lost a tremendous amount of credibility. A lot of people around the world feel that he's a racist, and that's not a good thing for the U.S. president, his persona type of thing. So, again, he would have to do something spectacular at this particular point in order for people to regain assurances and confidence in the U.S. dollar. My personal feeling is I still believe that the U.S. dollar is going to break par and hit new highs down the road. Again, I'm disappointed that Trump has not done what he's supposed to do, and that's pushed the market back by about 10 cents, because don't forget, when he became president, the market went to broke par and went to 103. So we're about down 10 cents with him as a president. And again, everything here seems to be about the stock market. The only thing that people think about in the U.S. is stocks. And the fact is, it's only a few companies that are doing well. As Randy mentioned at the beginning of the show, Toys R Us is going out of business. They're trying to hold on till Christmas, but again, at this point here, they're pretty well done. And so many major retailers are going out of business. I just don't understand how in the world this is going to play out. So again, these are not easy times right now. These are extremely difficult times. We're trading in a sideways type of market that has potential to break out because of geopolitical situations. So we watch gold every minute that it's trading, and the same with silver and the same with with the U.S. dollar. But again, at this point, no economy is doing well. There's no economy that is doing well at this particular point. There's still money coming into the U.S. stock market because Europe is doing so poorly, but the fact is that we're not seeing breakouts in any markets at this particular point. So, again, in order for gold to break out, we need to see it close twice in a row above $13.80. Silver's got to close above $20 twice in a row. And, again, we need to see a strong rally in the U.S. dollar, and that should help us tremendously.
Connect with Harold. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. 1-800-432-1022. Right now, obviously, the times that we live in are very confusing financially. And that's why we do the radio program. People need to ask themselves, with the game plan that they have, will they be able to retire? How do you invest today so you can retire tomorrow? That is the very big question we all need to ask ourselves. And that's why we do the radio program on a weekly basis. That's why we have our free weekly newsletter. And this is why Harold is there for you with the different investment ideas and programs that he has. Connect with him. Find out how you can be making more than 1% in a GIC. 1-800-432-1022, the website RareColoredDiamonds.com. Now, our featured diamond of the week, and we'll talk about diamonds in the second half of the show, is a .46 carat paracut fancy intense purplish pink argyle. See it online, RareColoredDiamonds.com, featured diamond of the week. One of the big stories of the week, and it was interesting to note, this is in our free weekly newsletter. We're going to go back in time and revisit the financial crisis. I remembered well, so does Harold. We actually predicted that it was going to happen, and indeed it did. I remember walking the halls of the radio station and people coming up to me and saying, "How did you guys know?" Well, it was pretty obvious what was happening in the housing market with the liar loans, and it was just a matter of time before the system collapsed. And it did. Well, it was 10 years ago this month, in fact, about last week, a lender called Northern Rock out of the UK, bloated with billions of pounds of risky mortgages, received emergency support from the Bank of England after the short-term funding it relied on dried up. Depositors lined up outside branches to get their money back, the first run on a British bank in 150 years. It was the start of a crisis that the country still has not recovered from. Northern Rock wasn't the only name to disappear in the UK. Bradford and Bingley was nationalized too, and beleaguered Alliance and Leicester was sold on the cheap. But it's the big retail bank survivors where the legacy of the crisis can still be seen. Two are vastly smaller than they were a decade ago. One of them is still in state control, and all are less profitable. In the years since, an estimated £1.2 trillion, 1.6 trillion US, was pledged to support the financial system. The UK's four largest domestic banks have slashed $3.6 trillion of assets by exiting foreign countries, closing risky trading businesses, and firing hundreds of thousands of staff. And they're not finished yet, obviously because of Brexit. The London area and market, the world leader when it comes to banking, may not be anymore because of Brexit and how that will be negotiated. One of the things that caught my attention, and we had it in our free weekly newsletter a few weeks ago, that Vikram Pandit, who used to run Citigroup in the United States, he said, going forward, there will be about a third less people working in the banking industry. So you're going to have about a third of the people working in banking now out of work due to changes when it comes to, obviously, computers and robots and all sorts of things like that. And it does open up a person's eyes to the future when it comes to the banking industry. One of the stories we wanted to touch on as well that affects us here in Canada, and one of the things that Harold has educated us on for a long, long time is don't spend more than you make, and definitely have a budget, put aside money, and have some investments that are making you a nice return. Canadian household debt-to-income ratio climbs to a record high in Q2. And it hit a record in the second quarter as consumers spent more on durable goods, pointing to the challenges that could lie ahead for the economy as interest rates rise. The ratio of debt to disposable income rose to 167.8% from a downwardly revision of 166.6% in the first quarter. Stats Canada said last week, meaning Canadians had $1.68 of debt for every dollar of income. While the report did not capture the effects of interest rates by the Bank of Canada in July and September, economists and policymakers are watching closely to see if heavily indebted Canadians, consumers, will be able to sustain higher interest rates and payments. It's confirming the debt levels remain high and are creeping up a little bit higher. That's been an ongoing vulnerability for the Canadian economy, according to Paul Furley, Assistant Chief Economist at the Royal Bank of Canada. Well, high interest rates are likely to dampen current consumer spending and could trip up some borrowers. Most households should be able to cope, according to Furley. And he goes on to say that they fear a more dire situation if borrowing continues to outpace wage growth. Canadians continue to tread water and are at risk of reaching their tipping point where they can no longer manage their debt payments, according to Scott Hanna, president of the Canadian, and this is the Credit Counseling Society of Canada. And Harold, obviously, we've talked about this before. That is a concern. The debt that Canada has, even the United States, citizens of the United States are no better off. And I would imagine that countries around the world, their citizenry is pretty much in the same position. So not only are countries indebted greatly, but you're starting to see citizens being in the same position because it's hard to get by financially, and people are borrowing money or selling off retirement funds to survive in the environment that we live in. And we have about 3 minutes left.
It's a very, very big concern, Randy. There's no doubt about it. And again, ever since Canada raised their interest rates a few months ago, we've been sitting here shaking our heads saying, why in the world, what benefit is it going to bring to Canada to raise interest rates? All it's going to do is hurt everybody, because now the debt level is higher because interest rates are going higher. We also have a major problem with real estate, and obviously higher interest rates does not help real estate. So again, it's a head scratcher to me. I don't see the benefit of raising interest rates at a time when Canadian citizens have the highest debt that they've ever had. They're having to borrow because the economy is so bad, because business is bad. So, it doesn't make any sense, and it's only going to cause the economy to go into a downturn, almost into a recession, in the sense that nobody's going to have money to spend. Every additional penny that they have is going to go to pay back their debt. And we know the Canadians are savers. So this is not a good situation at a time, when Alberta, for example, is hurting tremendously. The oil industry is down, unemployment, Fort McMurray got hurt, badly over the last couple of years. The markets have been going sideways. So again, it doesn't make any sense to me why they raised interest rates. I think it's going to turn out to be a disastrous decision that they made, and the fact is that I just don't see any way around it, but people are going to have a lot of problem, and they're not going to spend money because all the money is going to go towards paying this debt, and it makes no sense. It's going to hurt the economy, not help it in any way.
One of the reasons they did quantitative easing, central banks around the world, and negative interest rates is to get people into the stock market, into risk assets. And Deutsche Bank came out and said global asset prices are the most elevated in history. In an extensive report published by Jim Reed of Deutsche Bank, he said the next financial crisis, and specifically what may cause it, when it may happen, and how the world could respond, is something that they're looking at. And one of the things they're very concerned about is global asset prices, the most elevated in history. And then you take a look at what's happening in California, with more than half of California voters saying the state's housing affordability crisis. People can't afford to buy a home in California. They're so expensive that they're actually considering moving. 60% of people in the electorate there are actually talking about rent control and other statewide initiatives to get things under control. But this is what's happened. We've had stocks and bonds and real estate, due to quantitative easing and low interest rates, go sky high all around the world. They start raising rates and start pulling back on the easy money, as the Fed's going to do, start unwinding their balance sheet here in the next little while. It's going to be a very interesting time, and I would say stay tuned to our radio program, get our free weekly newsletter, be aware of your finances and where they are and how you can be making money today. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Any questions you have, Harold will be happy to answer them anytime. Connect with him at rarecoloreddiamonds.com. Coming up next, we'll talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 21st, 2017. Our time is 9:05 Mountain. A radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. And I know with Edmonton Oilers hockey coming up, we will let you know very soon if our show moves around due to Oilers hockey. I noticed some conflicts coming up in November. We will definitely let you know ahead of time. But if you ever do miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com, and we have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. You can connect with the podcast through rarecoloreddiamonds.com as well. If you do not receive our free weekly newsletter, it's a companion to the radio show, and it's a must-read every week. You can go through it in minutes, be completely up to date, and you'll see the stories that we are seeing. If you'd like to receive it, speak with Harold personally and privately, 1-800-432-1022. And it was a very interesting week, as we touched on off the top. Loonie down. Actually, the Loonie was up around 83 at one point. and it's down around 81 now. The U.S. dollar was down around 91 at one point, up around 93 now. So we've seen the Fed say they did not raise rates for the month of September. They will raise rates in December, 3 times in 2018. And people are seeing that here in Canada going, oh, I don't think the Bank of Canada is going to be doing that. We're seeing a pretty big pullback in the loonie. Also, Hurricane Maria wreaking havoc in Puerto Rico, a bankrupt country as it is. So that will be very difficult for them to repair. Mexico, 2 earthquakes. Trump gave a speech at the UN. Some people loved it. Some people hated it. Surprise, surprise. Toys R Us, they filed for bankruptcy protection. In Norway, their sovereign wealth fund hit $1 trillion. Our featured diamond of the week is a .46 carat pear-cut fancy intense purplish pink argyle. And the journey of the argyle tender made its way to Hong Kong during the week. Of course, it goes to the United States and London. It will be over in Australia, and they go to the Far East, Hong Kong. And we have a story in our free weekly newsletter all about that. The argyle tender, they have 58 diamonds, and that's 58 for the entire planet for the argyle pink diamond tender of 2017. Now, the closing date is October 11 to have bids in by, and it's anonymous. And when people are actually chosen to receive a diamond based on their bid, it's all 100% private. Only if they come forward and tell the world they have one of these diamonds that we know about it, but it's usually 100% private. But Harold, you think about the diamond we have, it's a .46 carat pear-cut fancy intense purplish pink. And those purple pink diamonds are absolutely gorgeous from Argyle. And you take a look at the rarity and scarcity of Argyle pink diamonds. This is something we really strongly believe people have to look at. We think they're going to be a major winner in the future.
You bet. I don't see how they're not, Randy, because, again, economics 101, when there's a strong demand for a commodity and there's short supplies, the prices always tend to go higher. And that's exactly what the situation is with Argyle. They've been in business since 1986. They discovered the Argyle mine, largest producing diamond mine in the world at that point. However, what most people don't know is that it produced 30 million carats of diamonds a year. 30 million carats, most of those are low-grade industrial white diamonds that are really used to cut other diamonds. So the Argyle mine was not a valuable mine. The white diamonds that they were producing were not of high quality. But the one major thing about the Argyle mine was that it produced pink diamonds. We all know what produces blue diamonds. It's when boron enters the ground and turns the diamond blue. We know it turns a diamond green. It's when uranium enters the ground and seeps into the diamond and turns the diamond green. We know it turns a diamond yellow or orange. It's when nitrogen enters the ground and turns the diamond either yellow or orange. Nobody knows why a diamond turns pink. That's the mystery of that diamond. Same scenario with red diamonds. Red diamonds and pink diamonds come from the Argyle mine. Now, most of the diamonds that they produce, again, are low-grade industrial white diamonds, but a handful are these magnificent pinks. And that's what the Argyle tender is all about. At the end of each season, Argyle takes their best 50 or 55 diamonds. You heard me right, 50 or 55 diamonds. They take them on tour. These diamonds are just over a half a carat, and they take them on tour to 5 or 6 cities around the world where dealers, high-end dealers and high-end jewelers get to view these diamonds privately and place a private bid. Now, I've been in the business for a long time. My partners have been in the business for decades. And the fact is, what's happening at the Argyle tender right now and for the last few years is that the prices have gone ballistic. Even on diamonds that have a very low clarity, as long as the color is strong on the Argyle diamonds, they've been selling for records at the Argyle tender. So again, you're talking out of 30 million carats of diamonds that came out of the Argyle mine per year, only 50 to 55 of them would go on tour as the Argyle tender. And the other diamonds that come out of the mine that are under a half a carat, are known as the most concentrated form of wealth on Earth, because you're talking that 95% of the diamonds that come out of the Argyle mine, as far as pink diamond goes, are under a quarter carat. So again, you're talking something that's extremely small, but very valuable. Obviously, if you can get a half a carat or a carat in an Argyle pink diamond, or a intense or vivid, whatever, they're worth more because of the size of it. So the fact is that we'll certainly find out how right we are on this Argyle situation, but the mine is going to close before 2020, which is only about 2.5 years from now. We feel that the price of the diamonds will increase substantially. As we get closer to the mine closing down, the prices should increase, and then when the mine closes, there will still be an inventory of some diamonds. So we're saying that over the next couple of years after the mine closes, give it that time for the diamonds to run out, and then we're dealing with a commodity that is in very short supply and in very strong demand. So we believe that the Argyle pink diamond situation is a good situation for our clients. We've invested in it very heavily. I own several Argyle pink diamonds. My partner owns over $30 million worth of Argyle tender diamonds. So we don't put that type of money into a market if we don't believe that it's a viable market that's going to make our clients and ourselves money. So we have our own private collections, but our clients also have private collections. And what we built is 2 websites, auction websites, both under H. Siegel Fine Auctions. One is a live diamond auction, which we will be having probably in November, that we're doing a white diamond auction sale, and it's mostly for people in the industry because we're able to sell diamonds that we mine ourselves at very low prices under the Rappaport, under the listing price for diamonds. So we think we're going to do very well, and we're going to introduce a lot of new people to our business. The other site is a new site that we just produced. Took about a year to do. We tried it out this summer, and it worked very well at a very slow time. Out of 11 pieces that we put up, we sold 6, but we are going to advertise that business very strongly, and we do believe that our auction business is a future towards selling our clients' diamonds and ultimately our own diamonds too. So very excited about this, Randy. We're going to have a lot of auctions going into the new year, and I think our clients are going to be very excited about that.
Connect with Harold. Find out more about rare colored diamonds at rarecoloreddiamonds.com, 1-800-432-1022. Featured diamond, a .46 carat, pear cut, fancy intense, purplish pink Argyle. There was a sale, in fact, yesterday. It was at Bonham's out of London. And it's interesting to note, Lawrence Graff, who is one of the top investors in diamonds around the world, is actually picking up a 4-carat blue diamond for $3.6 million at auction. And here we go again with blue diamonds. Blue diamonds continue to be red hot. A fancy, intense blue diamond, which had been held in a private collection for nearly 30 years. Wow, have we heard that story before? Lots of those diamonds obviously coming on the market due to the fact that the people who own them have passed on and passed them down to another generation. And it was sold for $3.6 million, smashing its $2 million high estimate at Bonham's in London Wednesday. The 4.03 carat pear-shaped diamond was the subject of a fierce bidding frenzy, according to Bonham's, before it went under the hammer, selling to Graff Diamonds, and the price per carat, $853,203. And Harold was saying to me prior to the show that was a very, very nice price. Another colored diamond jewel also achieved a strong price. A mid-20th century fancy colored diamond brooch sold for $980,000. The brooch comprised a 4.83 carat square step-cut fancy gray-blue, 2 fancy dark brown greenish yellow step-cut diamonds, weighing 2.51 carats and 2.38 carats respectively, and 1.90 carats of a pear-shaped fancy pink diamond. Now, the second highest value of the day was and we mentioned this out of interest, a 9.61 carat cashmere sapphire, and it was a single stone ring. The octagonal step-cut sapphire had no indications of heating and went under the hammer for $1.1 million within the estimate. That was $112,600 price per carat. And a 4.61 carat old marquee cut diamond, a single stone, a D color, D flawless, which, as Harold has educated us, those are the best of the best when it comes to white diamonds. VVS 2 clarity, potentially flawless, sold for $160,000. The estimate on it was around $130,000. And Bonhams went on to say our top lots performed extremely well, with global buyers vying for the prize lots. And that was according to Jean Gica, head of the jewelry department at Bonhams UK in Europe. The blue diamond and cashmere sapphire both achieved strong hammer prices, demonstrating discerning collectors will always seek out the best examples when it comes to fine gemstones. But I know, Harold, you had mentioned to me that you were very impressed with the price on this blue diamond out of Bonhams yesterday.
Yes, in actual fact, I think it should have sold for a lot more. Just judging by what blue diamonds have been selling for, the vivid blues, which is the highest saturation, they've gone from $200,000 a carat in 2005 to $4 to $5 million in 2016 and 17 that we've seen on important diamonds going to auction. That's a tremendous increase in about a 10-year period, 12-year period, to go from $200,000 to $4 to $5 million. Now, right below vivid blue is deep blue, and that's what Shirley Temple's diamond was. And that diamond was bought for $7,100 in 1940 and sold in 2017 for $25 million. So the vivids were selling for $4 to $5 million. Then you've got the deep, which is just below that, which is a very deep, strong blue. That was selling, in the millions. And then you've got the intense, which this one was. They have it listed as a fancy blue, but it's actually a fancy intense blue, and it's a magnificent diamond. The pear cut is one of our favorites. I know Randy loves that also. But the fact is that diamond should have sold somewhere in the $2 million range per carat. So they did pick it up at a great price. Blues have been the most explosive of all diamonds. In the last 4 to 5 years, blue diamonds have outsold and price-wise any other diamond. Nothing has compared to the blues. Now we're starting to see the green diamonds are starting to pick up similar interest. We saw a 5-carat vivid green, the Aurora green last year, or this year actually, sell for $3 million a carat. And we believe that the next major green diamond that goes up for sale could sell for $4 to $5 million, very similar to the blues per carat. So in this very difficult world, people are not doing so well in investments. If you're in the stock market, you're taking a risk every day. You know, the stock markets in the past, when they get into these rough situations, can drop by 40 or 50%. We saw it in 2008. We saw it in 2000. We saw it many other times. And the fact is that if you have all of your money in one particular investment, you're leaving yourself susceptible to losing all of your money. Don't forget, stocks that you never ever thought could have gone bankrupt, or companies, did in 2008. General Motors, Chrysler, all the banks, the major insurance companies. If it wasn't for quantitative easing, none of those businesses would be around today. They were all saved by the government. So the fact is that you need to diversify. You know, even though gold is trading in a range at this particular point, the fact is that the geopolitical situations make you want to own assets that you own yourself, that you can hold on to, that are in your possession. Gold is like that, silver's like that, diamonds are like that, jewelry, watches, all of those assets, as long as they're strong assets, are doing extremely well at auction. And that's the major focus of our business going into the new year, is to build our auction business. We have 2 of them, as I mentioned. We are going to hold auctions constantly, and we're going to do a phenomenal job in the alternative asset auction business. And we are excited about that going into the end of this year and going into 2018. So, again, just judging by what these assets are selling for at auction, it's great to see that people that invested in these 30 years ago are now starting to reap gigantic benefits, because there's no way in the world that 30 years ago that diamond sold for close to $4 million. That diamond back 30 years ago probably sold for under $1 million. That's how much of a return of probably 400% or more was seen on that diamond over the last while.
And it was a fierce bidding frenzy, according to Bonhams and Lawrence Graff, who has an eye for obviously great diamonds and value, picked up a stunning piece of nature's art. This week's featured diamond is a .46 carat paracut fancy intense purplish pink argyle. It's in the vaults of rarecoloreddiamonds.com. It could be on your finger if you chose for that to happen. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. To give you an idea of the scarcity of pink diamonds, according to Christie's, in the 244 years of auctions, only 18 pink diamonds of more than 10 carats have come up for sale. So close to 250 years, only 18. And that is a stunning statement. Melvin Kirtley of Tiffany & Company, their chief gemologist, said colored diamonds are even rarer than colorless diamonds. And when you get into colors like pink or very intense shades of pink or green or blue or even red, which is very rare, the amount that is available in the world is next to nothing. There are more Picassos in the world than there are colored diamonds. The rarity is enormous, so the value is incredible. And then there's the portability, as we've seen with people having to be displaced due to these storms. Angela Burden of Christie's, one of their jewelry department senior specialists, said, having your money in the bank may not mean as much as it used to. Colored diamonds are impressive, durable, and portable. In times of global volatility, the ability to easily carry millions of dollars in one's pocket may be a very attractive perspective. And we saw that with the hurricanes. And one of the things that Richard Russell said before his passing, another high-class area of transportable tangibles is diamonds. You can put $10 million worth of diamonds right in your pocket and have it obviously transported very, very easily. But I think Joseph Lipton says it the best, the CEO of Secured Worldwide. Diamonds are a portable alternative store of savings and wealth that are being increasingly utilized for diversification. And in a new and uncertain world, which surprises will continue to catch us all off guard, we've seen that here in the last couple of months, portability should absolutely be understood as diversification. The ability to easily move savings and wealth is not a feature of precious metals, real estate, or most collectibles, but it is for diamonds. They're arguably the densest and most portable form of savings and wealth in existence. Real estate is fixed, and $1 million worth of gold weighs about 10 kilos, as much as a large car tire, but a handful of collection-quality diamonds can be worth many millions of dollars and fit in one's pocket. And Harold, we don't like to disasterize or think about the worst-case scenario, but if you're going to have an insurance policy, such as hard assets like gold, silver, and look at diamonds, that's something obviously that you want to take into account, and you need to be aware that it does have that factor as well. And yet it also has, when we had the seminar here in Edmonton a number of years ago, the ability to, there was a young woman who got a pink argyle diamond from her boyfriend through Harold, and she was showing everybody the ring, and there was a massive, I guess you could say, circle around her in her hand, looking at a stunning, beautiful ring. So you can see portability, privacy, and yet at the same time, you can go out and use a diamond like that. And as Chris Delgado, a jewelry expert, says, jewelry is an investment you can wear for 30 years and sell. What else can you do that with? And Harold, we have about 5 minutes left here.
Well, that is exactly true. It is an asset that you can keep with you for as long as you want, or hand it down from generation to generation, and that's when, they tend to pick up most of their value. So, the thing is that it's a crazy time. when I really started getting into the diamond market, I was looking for an asset that would be strong in currency situations. And diamonds really fit that bill, colored diamonds, because they hold their value and they appreciate over a longer period of time. But the fact is that we always talked about portable private wealth and the importance of that, but in all reality, how many people actually believe that they're going to be uprooted from their home, that they're going to need the type of asset like a diamond that they can put into their pocket and leave for another country if they lost their job or the country went under or terrible things happened? You know, that's all the selling points of owning an alternative asset like a diamond. But the fact is that you don't really ever believe that you're going to have to leave your homeland in order to go move somebody else because of a disaster. But now look what's happening. In Europe, we saw several countries go bankrupt. We saw Greece and Italy and Spain and Portugal, and all the people couldn't get their money out of the banks in Greece, and it was a panic situation. You know, so tell those people now that had assets like diamonds that could go across the border to Switzerland or Germany and sell them and get back into the business, get back into the game. Diamonds are that type of asset. Now you've got these natural disasters that are hitting, all these hurricanes. Look at the poor people of Puerto Rico. They're not going to have power for a year. What are these people going to do in a totally bankrupt country? So again, when I was looking at the diamond market, I was looking for an asset that was comfortable with currency devaluations because I felt that the Canadian dollar at that time was going to fall, which it did substantially by 30%, and my clients that were in that diamond picked up 30% on the currency, let alone what the diamond increased to. So what I was looking for in that asset is actually there. Did I actually believe that we would have to one day leave where we live and take our diamonds with us in order to start all over again? No. The chances of that happening are slim in North America and Canada and the United States. But now look what's happening. All the people that live in Puerto Rico, the British Virgin Islands, the U.S. Virgin Islands, the Bermuda, Turks and Caicos, parts of Florida, Houston, there's 40,000 homes at least in Houston that are underwater and are not insured. All those people are now bankrupt. They have mortgages on those homes, and those homes are destroyed, and there is no insurance on them. So those homes are not going to get rebuilt because the people don't have the money. There was over 1 million cars that were destroyed in the hurricane in Houston. Well, most people that own cars buy them on loan. So these cars were not insured. They didn't have flood insurance. They have loans on them. Where are these people going? They lost their homes. They lost their cars. In most cases, lost their businesses because they've been out of business so long. And now, what would the value of an asset like a diamond be worth to them? So you never know what's going to happen in your life. The good people of Fort McMurray over the last couple of years got annihilated because of the storms and everything and the fires that went up in Fort McMurray. And a lot of people had to leave their homes. So this is what I've been talking about to you. Assets like diamonds are very, very important because in the case of a dire emergency, they're instant cash. You could sell them for enough money to get back into the business and get back into action again. And that's extremely important, especially with the world that we're living in right now. So, again, where I never felt before that we would need to use that aspect of the market, which is possibly leaving the country and going someplace else, now it's real. And then you've got people that are expatriating because they hate the president here, and they're giving up their passports in the States and going to another country. Well, you can't take your stocks that easily with you. You can't take your cash. You can't take physical gold, but a diamond you can take with you. So, again, not only is it a portable private asset, but it has other tremendous benefits. So, again, Randy, with the world the way it is right now, with investments very iffy and sketchy and all these natural disasters and everything, it's even more important to own an asset like a diamond at this particular time.
Thank you very much, Harold Siegel, for another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.